With a better part of the earnings season behind us and the US Federal Reserve's stance on liquidity and interest rates known, trading in stock markets from here could be bumpy for the Wall Street investors in the near term. Last week, the BSE Sensex ended somewhat 2077 at 60,068 levels, while the Nifty 50 settled at the 17,917 mark. The exchanges conducted the Mahura trading session on Thursday evening to usher in the new Samvat. However, red flags are now up on the street. Analysts are advising investors to tread carefully as the markets face multiple headwinds, both from domestic and global factors, which could keep them choppy.
The markets are going to be volatile, at least in the short term, because we have already seen weakness last week. And I assume that weakness will continue, except for possibly some sort of a bounce back because of the festive season. And normally what we see on Muhurat Day is that the markets close in the positive. So I think people should utilize any sort of a bounce back to possibly book out to an extent. Because whatever said and done, all those red flags are very clear right now. The oil prices are shooting up. We are having the interest rate also slowly, the yield slowly moving up. And then we'll have the Fed tapering coming quite soon. So with all this, I think the liquidity will get sucked out to an extent. And if the markets correct, say more than about 8-10% from the high, I assume that the retail investors who have just been investing based on tips and speculating, I think they'll start panicking.
So which sectors could possibly see a correction and which ones may present a good buying opportunity?
I would say this is across most of the sectors, but then the sectors which will continue doing well going ahead would possibly be real estate, the specialty chemicals segment. I think these are the two segments which will continue doing well. So I think any sort of a decent correction could be utilized to buy these sectors at lower levels. But other than that, at the same time, I would say even pharma to a large extent is a defensive sector. So I don't see a major crack as far as that sector is concerned. Other than that, I think we will see a very good correction across the other sectors, including automobile, cement to a certain extent, despite the fact that the demand is good, but then we don't see margin improvement immediately.
Okay.
Metal sector, which has shot up in the last 8-9 months, I think it's got too expensive for a cyclical sector. So I think that's one sector where one could book profits.
Okay.
From a long-term perspective, Motilal Oswal, MD and CEO of Motilal Oswal Financial Services, believes markets have always moved in tandem with earnings growth. And although there would be ups and downs in between, he expects the overall trend of the market to remain positive in somewhat 2078 as well. This week, however, markets will focus on primary market action, the last leg of corporate earnings and economic data. 3 new initial public offerings of Paytm, Sapphire Foods, Latent View Analytics are set to hit the street this week. Moreover, Nykaa's share could also debut on the bourses on November 11th. In the secondary markets, stock-specific action will remain high with companies like Coal India, Hero MotoCorp, Ashok Leyland, MRF and BHEL slated to announce their results this week. On the economic front, retail inflation data for October will be released on November 12th. Globally, markets will react to the US Fed's decision today as the markets open for trade on the first day of summer 2078. Oil prices, FII fund activity and the rupee's movement will also guide the sentiment this week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.